Hi all, it's 18 September 2021 today. I'm going to touch on Chinese equities market weekly review. The key question today is, can we hold the line? Is it a clash between the bulls and the bears? Ideology clash or just being bearish for the general markets, in particular Chinese markets? This week, there's regulations concerns like gaming, casino, EV. So you actually look at the Seng Tech Index. Well, it's been tracking down this week, falling from 6,700 all the way down to 6,160. As low as that on Thursday, where yesterday there's some positive signal from the Chinese regulators and the market in general, which bring it back for Hang Tech Index to close to 6,452 points. The few key price point which I mentioned in my earlier videos are 6,300, 6,600 and 6,100 and 6,960 points. Do watch out for that because these are very critical points to watch out for. Like what I mentioned, the key question is, do you think the support level is at 5,400 or 6,100 for Hang Tech Index right now? It's a different playbook for different price point attachment. For me, my previous view has always been that I'm cautiously optimistic. Reason being because the market, in particular Chinese market, has found the bottom and is tracking way up. So this point is critical for me to see. If you have a different view that you say, well, it's going to go down another 10-20%, then probably one could consider to stay on the sideline if you have certain exposure in the equities market already. Like me, I already have a decent portion of equities in the market. So this is a Hang Index chart. Well, you look at the 50-day, 100-day moving average and 200-day moving average. At 24,920 points for Hang Index, which closed on Friday at that level. It's way below the 50, 100 and 200-day moving average. And yesterday bond yield spiked up for the US itself, went up to above 1.33% and it's at 1.36% right now. So is it a general market concern or is it just the Chinese equities market? In fact, we are at a very critical price support level for various indexes, not only in the Chinese market, but also in the global equity markets. But one thing at one time, that is, we need to clear the 25,000 point for Hang Index. And if in the next few weeks, it can move out to 26,800 points, then this uptrend back for the Hang Index and the Hang Tech may be for real. Let's watch out for it. This is a longer price chart of Hang Index. If you are concerned about we are heading down to 23,700 and 22,500, then you have to think carefully. Are you missing out or should you stay on the sideline with some cash to position for discounted shares? But the good thing here is you look at point 3. There's less selling volume compared to August 2021 on Thursday itself, where in August there's basically a panic on 23rd August, where the volume which I circle out is so much higher than the panic selling on Thursday. And on Friday itself, when the market closed, you actually see the volume is actually purchased. The volume purchased is actually higher than the volume sold on Thursday. Isn't it positive? To me, it's a positive. But of course, with Hang Index not moving above 25,000 points, we still have to watch out for it to see what the market is really telling us. Well, I pulled up the number of stocks in my watch list, and I see that stocks like JD Health, MedLife, Kasken, Kuaishou, Li-Ning, Haidilao, BYD Electronic, Haier Smart Home, all these have moved out. Shanghai Index and Shenzhen Index is also holding above 3,600 points and 14,000 points, a positive for me. A good thing is Kuaishou is also holding above 100 Hong Kong dollar. The volume of purchase actually spiked up. You can take a look later in the later charts that I'm going to cover. And Haidilao is above $30 and Li Ling is holding above 100 Hong Kong dollars. Good, isn't it? And China applied to join key Asia Pacific trade agreement to boost economic growth. Well, signals that China is still open to the global economy and they will never shut its door. The current regulations are aimed to focus on the China core. At point 3, what I mentioned, there's more volume purchase on Friday in Seng index itself compared to the selling situation back in August 2021, where you see the volume purchase following the day of 23rd August actually not as strong as the selling volume. Well, this is Alibaba US share price chart. Yes, came down, and whether it found a head and shoulder, and for it to break support at 152 USD is critical. For me, I believe Alibaba will underperform other Chinese equities market. Reason being because it has led the fall way back in November 2020, whereas other Chinese equities market shares actually came down only in February or March 2021. So you look up for two price point, 152 and 159 USD. Hopefully, if it move back above this level, then at least that Alibaba still has some meat for us to actually pick on if one decide to actually buy the long game for Alibaba. If not, short terms wise, if break the support at 152, I really worried for it to go down to 120, 130 USD. This Xiaomi price chart. Although I'm a Xiaomi shareholder, I'm concerned because Friday when it actually went up to above 23 Hong Kong dollar, it does not went up strongly way above 23 Hong Kong dollar. It actually came down back to 23 Hong Kong dollar and it closed it there. If it doesn't hold the 23 Hong Kong dollar line, it has to find support at 20 Hong Kong dollar, which is a firmer support. If on the other hand, Xiaomi can hold above 23 Hong Kong dollar and move the way up rapidly back to 26 Hong Kong dollar, then this is a strong signal that Xiaomi in the near 6 to 12 months has some room for further price appreciation. Kuaishou, this is a counter that I covered way back in August. And I say that, well, it's interesting to look at this counter. And in fact, on Friday, its volume spiked up. You look at the volume on Friday, where the green bar at the bottom right of the chart, it went all the way up, way above the purchase level on 23rd, 24th August. For Huya point 2, it closed at 9.21 USD, still lower than recent fear level of 9.37, but slightly higher than recent low of 8.81. Douyu is at 3.58 USD. And for Bilibili US share price is at 74.4 and 7% below 80 USD. So in short, Huya, Douyu and Bilibili are weak relative to Kuaishou. And if anyone considers to make a purchase, I think Kuaishou is a better bargain compared to these counters, though I did have a small position in Huya. Thoughts. Higher volume seen for HSI with it closing at 24,920 may give some comfort. Hang Tech right now at 6,450 points around there. It's not exactly out of the woods. Can it move itself up rapidly above 6,600 points and busting past 6,800 points? This is something we have to watch out. If it is, then the uptrend or the reversal from the downtrend may have story to tell in the sense that the reversal is for real. Kuaishou, you know my view, as mentioned earlier, Xiaomi price weakness and struggling to go above 23 Hong Kong dollar made me a bit concerned, but let's watch and see. But China application to join Asia Pac agreement is a positive sign for me. And Alibaba and Tencent still struggling to hold a safe margin above its recent low in August. Tencent, I think the recent low is around 412 Hong Kong dollar. Alibaba is around 152 USD. So between these two, if one really want to buy a big China tech, I think Tencent is a better performer on a relative basis. So it's a safer bet. For me, I'm still continue to stay on the sideline because I already have a big position in Chinese equity as part of my portfolio allocation. As always, this documents my thought process on whether do I want to acquire, sell, or hold current positions. This should not be construed as any investment or trading advice. Thank you. Nice weekend.